Alright class, this is your final project workbook template that you will be turning in during week 3 for milestone 1, and it's also similar to your comprehensive problem that's in the Cengage homework. Sorry this is getting out so late. If you can tell by my voice, I was a little bit under the weather this week and I just didn't have the voice to record this video earlier this week, so we're getting to it now. Sorry it's a little late, but I think if you follow this video and you follow the template that I'll post out on the announcements, I think this will go very easily for you, and it should also help, again, like I said, with the comprehensive problem in Cengage. So what we have is the chart of accounts. Every business sets up their chart of accounts, and it's just a standard naming convention for the accounts that the company is going to use. And so you always want to stick to the chart of accounts. You know, you don't just make stuff up. You don't make up new accounts. You don't call it, you know, telephone expenses one week, and then the next time, you know, maybe you call it cell phone expenses, or you know, you make up something similar, but you always use the same standard convention. And then, so we'll go through the October journal entries. And this is just how you evaluate the debits and credits, how you enter the debits and credits. It says in October 1st, the business owner used $25,000 from their personal savings account to buy common stock in their own company. And so what you're going to do is you received cash for the business. You can either type it in, and if it recognizes it, it'll take it, or you can use this drop down and say cash, 25,000, to increase cash, we debit it, and then the other account is common stock. I'm just going to type it in. I think I can spell it. It didn't like that. No, I didn't like that. Let's just use the drop down menu. Yeah, it's kind of touchy. If it doesn't like something, it'll let you know. There's common stock and 25,000. There we go. The next entry, it says purchased 8,500 worth of baking supplies from the vendor on account. So we got baking supplies for 8,500 and accounts payable. I'm going to select this one. Accounts payable on account 8,500. Okay, and then October 3rd, the company borrowed 10,000 in cash in exchange for 2-year 6% no payable. All right, so let's record that. We received cash in the amount of 10,000. And now we have a note payable. $10,000. All right. Then it says entered into a lease agreement for bakery space. The agreement is for 1 year. The rent is $1,500 per month. The last month's rent is $1,500 is required at the time of the lease agreement. The payment is made in cash. Lease period is effective October 1st of this year through September 30th of the next year. Okay. So we have our rent expense. For the current month. For 1,500, and then we prepaid the last month's rent, so we have a prepaid. Let's see if I can just type this in. Rent, prepaid rent of 1,500. Excuse me, and then we have cash. We paid all that in cash, so to decrease cash, we're going to credit it for the total amount. Remember, your debits and credits always have to balance. So we had a $1,500, and we paid a total of $3,000 in cash. And there's a little cheat here down at the bottom that's going to always make sure that that is in balance. Okay. And then for 10 October, we paid $375 for the county for a business license. So we had a business license for 75, and then cash, paid cash for that for 375. Okay. Then on 11 October, purchase a cash register for 250, deemed not material enough to qualify as depreciable equipment. So we said that's going to be a miscellaneous expense. For $250, and we paid cash for that. One of the things I've found is always try to determine what's happening with cash. Is it cash inflow? Then somewhere you're going to debit cash. If it's cash outflow, somewhere you're going to credit cash. So that's one way to evaluate quickly. So then in 13 October, the owner has baking equipment, including an oven, mixer, which I've used for home-based business, and then I will start using the bakery. You estimate the equipment is worth $5,000. You transfer the equipment in exchange for additional common stock. The equipment has a 5-year useful life. So that 5-year useful life will come in later when you're calculating depreciation, but for now, all we need to do is record the baking equipment. For 5,000, and we traded that for common stock. Okay. 13 October, paid 2,000 for business cards and flyers for advertising expenses. Okay, so we're gonna have a cash outflow. So somewhere we're gonna credit cash, but so we have an advertising expense for $1,500, right? Nope, $200. And then we have a cash outflow for $200. All right. And then 14 October, we paid $300 for office supplies. So pay attention to these office supplies also. These will come into be a factor later on. It's $300, and we paid cash for those office supplies. So cash credit for $300. All right, 30 October, we had a telephone bill. We received the telephone bill. Notice we didn't pay it yet. So we're going to record a telephone expense for $75. Now we didn't pay it, so it's not going to debit credit cash. What we're going to do is we're going to park it in accounts payable, and then next month we're going to pay it. So accounts payable. All right, and then we had paid $1,200 for 12-month insurance policy. Policy effective dates are November 1st through October 31st. All right, so we had prepaid insurance, and that's going to be, and then cash. We paid cash for this. All right, and then 31 October, accrued wages earned, and the wages earned, there's a table at the bottom of your accounting data appendix, the Word document, and there's a wage calculation data table there at the bottom, and so you're going to use that, and it's going to give you some figures or dollar amounts to use in your worksheet. So 31 October, accrued wages earned for employee for period of October 16th through October 31st. See the table at the bottom of the document. All right, so we've got wages that we need to pay. So we record a wages expense. And down at the bottom of the table for 31 October, it says the pay is $120. So we haven't paid these wages, so we record them as a wages payable. All right. For $120. Then the last thing that we record is total October bakery sales was $15,000. 5,000 of these were on sales were on accounts payable or accounts receivable, and then it looks like 10,000 of those were paid in cash. So 10,000 of that would be paid in cash. So here's what you can do is you can record what you know. So we can record the bakery sales. Sorry, I'm running out of breath here. Bakery sales were $15,000. And it said that 5,000 of those were on accounts payable, or accounts receivable, sorry. 5,000 of that. So the difference, if your debits and credits have to balance, the difference of that would be, okay, we must have received cash payment for the other bakery sales, which would be $10,000. So we balance here at the totals balance, the debits and credits balance. That's great. That's what we need to do. So there's your October journal entries. Your November journal entries, I gave you the accounts. You just have to fill in the dollar amounts here in the yellow blocks. And then the December journal entries, you're going to have to fill in the accounts and the amounts. So you're on your own for that December. But if you use my template that I'm going to post, all of these, as you enter those journal entries, it's going to feed over to your T accounts. Okay? And that's going to be very helpful. If you don't use my template, you're going to have to go back and record all of those. It's going to be very tedious, right? So you'd have to go back and find all of the cash transactions and record them in this T account. If you use my template, they're going to automatically, they have formulas that are going to feed them over, and it's going to automatically fill this in for you. It's going to be very helpful to save you a lot of time. So then there's also the same with the trial balance. All of your entries will feed over to the trial balance, and that'll be very helpful. It'll give you your unadjusted trial balance. Be very helpful for you to save a lot of time. So that's it. I'll post some more videos on this, but that's how you enter journal entries, evaluate and enter journal entries for October, November, December, and that will get you. And as long as these feed over into the T accounts, those 4 tabs are milestone 1. Once you complete those 4 tabs, you're home free for milestone 1. Turn that in, and you're good for week 3. So thanks for your time.